think that this one, even though it might not be what the average person talks about or is concerned with, is interesting. So a lot of our trade is based on the strength of the dollar. You know, if the dollar is strong, it makes things like commodities more expensive, right? Because all commodities in the world are denominated in dollars. So a weaker dollar, some people feel is weak for our country. I don't know if I buy that. But a weaker dollar means, you know, think we all live relatively close to Canada. If the Canadian dollar stays the same and ours drops 10%, we don't notice a difference. We're just going along about our day spending American dollars. But Canadians can now buy everything cheaper here at a 10% discount. You know, if our dollar drops 10% and the Canadian dollar stays the same. So if our dollar gets cheaper it doesn't really make a big difference to us, but to other people, they can now buy more of our stuff and it helps us export. Exporting is great, especially in a world where people are starting to see kind of some cracks in their supply chain, and a lot of companies are bringing it back. I read the other day that Apple 5 years ago had 38% of like its critical infrastructure in the US. Today it's over 70%. So in 5 years, they've basically doubled the amount of like supply chain infrastructure they have just in the United States. Now that's a huge deal. So if a bunch of other companies kind of start to do that, if you read recently, Michigan has kind of been out of shape because Ford is investing like $11 billion in making batteries and electric cars down south instead of here. But they're making it here. It's not in Mexico and it's not in China. You know, so a lot of that critical infrastructure is coming back to the US. If that could be combined with a weaker dollar and we could start exporting more things, that's great. And that would, I think, help our economy. Something though that, you know, they call here the twin deficit. So the twin deficit is the current account. That's a fancy way for economists to say the budget deficit, right? Or excuse me, trade deficit, the trade deficit and the budget deficit as a percentage of GDP. And you see how that number has just plummeted. You can see though that it tends to follow, I mean, right here being the exception, but this goes all the way back. I mean, this is 8 years older than I am, for goodness sake. So this goes back far. So you can see they kind of trend together, right? Kind of the dollar index, basically the strength of the dollar, and the US twin deficit, which is trade deficit and budget deficit. And as you can see, that orange is just way down. If the dollar follows it by that much, one of the questions that I get a lot is, what about Bitcoin? What's going on with Bitcoin? Is it a real thing? One of the ways that the US is able to do everything that it does, whether it's fight terrorism, whether it's try to get people to have good corporate governance, whether it is to put sanctions on people, you know, kind of anything that the US is trying to do is based on people's strength in the dollar, right? They believe in a strong dollar. And if people start to kind of not believe in that dollar, two really bad things happen to us. Number one is interest rates go way up, right? The government can't sell their bonds because no one wants them. The bonds are what finances our debt. So of course, instead of selling them at 1.5% for a 10-year bond, they've got to sell it at 4%. Now a ton of our budget goes to paying off our debt. We don't have as much money. We either have to raise taxes drastically or cut spending drastically, which kills the economy. So this, I think, is one of the big things that, and you'll sense a theme in everything that I'm talking about. This will kill the US. If the dollar drops like this, and we see a 20% drop from here in the dollar in like a year, that is a huge problem. Mainly because people's confidence in the dollar will be eroded. And the fact that we can run these huge deficits is because the whole world runs on the dollar. The whole world runs on the dollar. And if we can't, if they don't have confidence in us and they start to use Bitcoin or maybe a basket of other currencies, the euro, the yen, the Swiss franc, the pound sterling, and instead of just using the dollar, they start to use like a basket of other currencies or potentially crypto, that very much cripples the United States in general, and interest rates could skyrocket and that could hurt us. Now, if the dollar trends down, so if our budget deficit is not as bad as it is right now next year, because we're not spending like crazy, and the dollar just kind of trends down a little bit over time, I think we're going to be fine. But if this continues and we see these deficits and trade deficit and budget that are leading to these huge numbers here, the twin deficit number, and the dollar even gets close to that, I think that could really hurt the U.S. Both short and long term. Again, is that going to kill us today? No, but if it goes down fast, it can have a big impact. So that'll be something that we're watching.